Hey, good morning, everybody. It's Brian. Hope you're doing well today. It's Monday, the 29th, 28th of February. Good Lord, all over the place. So today is Monday, the 28th of September. Gonna just run through the numbers real quickly and then let you guys get on with your day. Not a whole lot to really jump in and look at this morning, a whole lot to talk about. Uh, it's numbers the numbers, and the process is the process, and that's about all we need to worry about, right? That's all we need to focus on. So before we get started, let's pop over here to this screen and talk about what's coming up this week. We've got some news happening this week. The big thing really is on Friday, which is non-farm payroll. But throughout, we've got ECB President Lagarde is speaking today at 8:45. Just a press conference. Just different statement in front of this. So I don't know what that's really going to do to the market, if anything. The bigger stuff is back here, though. Non-farm payroll is this Friday, and this is the one that we'll really watch. So Friday would be a great day to potentially keep our finger off the button, at least until we see what the market thinks about what occurs here. Definitely don't want to trade it in advance of it. We've talked about the whys behind that. We want to let the news come out, let the market digest that, and then follow the direction of the market, not trying to front run the news or trade directly on the news with what we think should happen or hope should happen, right? So that's really the big stuff. Manufacturing on Thursday, but the news event that we really have to worry about is the one on Friday. Leading up to that, it'll be pretty much trading as normal. And what is trading as normal? Trading as normal simply means we've got a plan, some sort of a plan in advance of the market starting, and we trade that plan. As far as plans go for forex, flipping over here and talking about what's going on in the forex market, we're trading strength against weakness, so we're just looking at the currencies that are currently moving and pairing those together for opportunity. The pound coming into the news session this morning is definitely the strongest currency. However, as we saw a couple of days last week, if we look at pound cross pairs, they've moved significantly more than their typical average ranges would be. So even though the pound looks great here from a divergent standpoint, take the pound CAD for example, we've already moved 212 pips on an average of 150. Could it keep moving? Yeah, absolutely it could keep moving. But, we ask ourselves, what's the likelihood? This might be more of a situation where, you'd look for the pound to begin reversing and trade some reversals towards the end of the day in order to pick up a few pips in the opposite direction as the market cashes in. Pound USD, 180 pips on an average of 140. It just, I'd rather not get into something like that where we've already moved at or more than the typical range would be, simply because we're just looking at odds and probabilities. What are the odds and the probabilities it's going to continue moving? How much further can it go? Does it have enough in the tank to get us that extra 20 pips? So I'd rather just avoid it. So I step back. Even some of the euro cross pairs aren't great, but euro versus the CAD, looking in here a little closer, we've got the euro that's been above the midpoint all morning and is pushing to strength. We've got the CAD, we've also got the USD, we've even got the yen that are down here below the midpoint. So something like that, this is what I was looking at. The euro above the midpoint, CAD below, yen, even the USD below the midpoint here. So now, looking at something that hasn't been moving quite as much but still has strength in relation to other currencies. We've still got a strong currency and weak currency. That might be the better situation to look at. So like the Euro CAD, for example, it's moved 65 pips on the day, averages 80 to 90. Even there, probably a little tough, but could we get our additional 20 pips? Yeah, that's a little bit more likely than one that's moved to 212, and we're looking for it to keep going. So with all these, really, I think today is just a good day for me, to look at this. I'll watch the euro versus the CAD, see what happens there. It's a little more volatile than the euro versus the USD. So maybe we get some opportunity if we get a good push through the top of that box. But that'd be the only one that's really got my eye this morning that's really standing out. So that would be what we're going to look at there. Over on the futures side of things, kind of a mixed up market here. Big rally on Friday in the S&P, and it looks like it's continuing during off hours here this morning so far as well. So the downward trend, the bias on the 4 hours is still short. So we have a short 4-hour bias, but we've got a long 30-minute bias. So these are mixed. That's telling us, hey, let's just not trade. We'd stay away from this. So we're not going to look at anything here until this flips back over and falls back short again, and that would give us the opportunity once we get a confirmed short bias on the 30-minute, then we can start looking at potential trading opportunities. But for right now, this is just pushing back to the long side. Places to watch here for potential reversals would be this 34.40. We're coming up 34.35, 34.40 even is going to be an edge up here that we could potentially look at reversals off of. Of course, you break through 34.40 and close above that, then 33.60 is going to be our next level up. That would be that potential resistance point for this long run right now. But of course, as with everything, we have to have some sort of a plan for approaching the market. So, whatever your plan is, just make sure you sort it out in advance of getting into the market, because when we're trying to do things on the fly, the plans can get altered based on emotion, and we don't want to trade based on emotion. So the watching multiple time frames, looking for bias here, that tells us sit on our hands, don't do anything, just wait for the market to give us an indication of what it's going to do. If you've absolutely got to trade and you can't just wait and follow the plan of waiting for market bias, base it on something quantifiable. Look at your key levels and figure out what's happening here. You might say if we break above 33.35, or maybe you break above 33.40 and you close above that, maybe then you're willing to go long again. You might look down here at 33.20 and go, well, if we pull back to 33.20 and stay above that, then I'm willing to go long off of that, just basing what you're doing off of your 30-minute over here. But I really feel like the best course of action is one that you've got over a longer period where you can be calmer and don't let emotion drive what you're doing, or a need to specifically trade every day. And I think over that longer term, you're going to be in a much better place, right? So this tells us mixed bias, sit on our hands. What's happening in crude? Crude is kind of been chopping around here, but having a little bit of a long bias. If we go over here and just really look at this, we can see that we've crossed over. So crude, the 4 hour, if you can really see that. Here on the 4 hour, we can see that we've crossed over this big green candle, which is driven by the early session trading this morning. Has pushed us into a long bias on the 4 hour. So the 4 hour is long, and the 30-minute is long as well. It's just crossed over. So for crude, we'd be looking for long trading opportunities. That could look like a couple of things. One, sorry, I got to get this back where it was. It's going to drive me crazy if I don't make it like it was before. So for crude, we'd be looking at long trading opportunities. 4 hour bias is long, 30-minute is long. That could look like either a pullback, back down to 40.20 or even 40, right? So we could look for pullbacks, or we could look for breakouts, which would be breaking above 40.60 here, and just playing the break. If it breaks 40.60, taking it longer from there. And then finally, the way that we track and talk about it here in class is letting the market pull back with, since we're in a long bias, we'd wait for the market to make lower highs and lower lows, lower highs, lower lows, and then we'd enter on the break of that previously closed lower high and take it long. So we're going to trade in the direction of the bias, but waiting for the market to pull back and give us a little better price than we would just on a straight breakout up here. Right? So for crude, we'd be looking at long trading opportunities. We gave you a couple ideas there. Over on gold, gold is still in a short bias on the 30-minute and the 4 hour. So for gold, we'd be looking for short trading opportunities. What could that look like? It could look like pullbacks, to 1880 and then maybe 1875 and then selling off of that. Or breaks down below 1855 or 1850, probably even be better, but 1855, and looking at shorts from there down. The other way to go about it, which I feel like is a little bit safer, is to let the market make higher lows and higher highs and then sell if we break back down in the direction of the trend. I like that method because if it doesn't break back down and it keeps pushing up and the trend changes, it keeps us out of a trade, right? That's what we're looking to do. So, is trade when the opportunity is the best. So there we go. That is it. As far as crypto goes, I'm still working on that automated process out there. It's as with anything, easier said than done. I feel like the process is pretty solid. I'm just having trouble getting the signals to flow consistently and be filled consistently, which is obviously a big deal. The filling, without getting massive slippage is a big deal. So trying to use limit orders because obviously it reduces the cost of getting in and getting out. So anyway, still working through it. I still feel fairly confident that in a few weeks I'll be able to have something out there, but I don't want to put anything out until it's been through live market for a little bit and actually shows the results that I feel like it should be getting, it can be getting, and maybe it never pans out. We just have to keep trading it manually. That's fine too. So anyway, that's where we are with that. That's why I haven't looked at crypto in a while. All right, so that's it. We've got our marching orders. As I mentioned, just kind of a good day to be safe. Keep it light, keep it safe. Only trade the absolute best opportunities for your trading plan, right? So that means you've got to have a plan. In order to trade only the best opportunities, you've got to have a plan that you can trade, right? So have a plan, stick to that plan. It's all about the process. The fruit of that process comes down the road as you're consistent with managing your risk, right? So I'm going to leave it here. Have a great day, and we'll talk to you soon. Bye.